Good morning, guys, and welcome to another live trading webinar. Thomas said good morning. Good morning, Thomas. Williams, good morning, Theo and everyone. Good morning, Williams. Wilson, hi, Theo. I sent you an email a couple of times. Yes, I saw. I read your email, and actually this morning I replied. Thanks for your patience. Cherry, good morning, everyone. Good morning, Cherry. Rumen said good morning, all. Good morning, Rumen. Philip said hello. Hello, Philip. Maria, Julia, good morning to all. Good morning, Maria. Joanna, good morning. Good morning, Joanna. Mr. Nick, hello, everyone. Hello, Mr. Nick. Larry, good morning, Theo. Good morning, Larry. Darshan, good morning, Theo. Mr. Darshan, it's been a while. Where have you been? Sent morning. I like this. M-R-I-N-G. Good morning, Send. Mladen said good morning. Good morning, Mladen. Marcelinus, good morning from the Netherlands. Whoa, what a surprise. Good morning, Marcelinus. So, how are you guys doing today? Is everyone all right? How is trading going? As usual, with our risk reward, said that this webinar is for general information only. It is not intended to provide any training, trading, or any kind of business or personal advice. Be prepared. Remember, if you are new here and you haven't, you don't know that every single Sunday or Monday, I upload the fundamental analysis in a podcast format. You can visit our website and download it. If you need the link, please kindly ask me on the chat. I will send it. And also make sure you have downloaded the mobile application. Let's go to the charts. Let's start with the pound US dollar. On a daily chart, yesterday we had this bullish engulfing. For me, still, I don't have any plan to trade this to the upside or to the downside. This bullish engulfing occurred. Let me show you. So this bullish engulfing occurred in the middle of the move. So I don't know for how long it's going to last. Anyway, I'm not into the move. I'm not willing to jump right now. But what can I see? If we see, what can I say? If we see some weakness in the dollar after the non-farm payroll event, most likely we're going to see some bullish on the pound against the US dollar. Now, remember, guys, today it's the non-farm payrolls or NFP. For new traders, non-farm payroll, it's the one and single event that brings the highest volatility in the market, is the event that usually causes the price of the majors to just move sideways at least a couple of days before the event, because traders anticipate a lot to see this non-farm payroll outcome. And what it's all about, it's the indication, it's the number of how many new payrolls have been added to the US economy the month before, the previous month, not the current month. And something, guys, I realize that it's not that clear as well on the calendars, and traders, when they see, for example, an event, okay, let's talk about the non-farm payrolls. Let's say non-farm payrolls, today it's going to be positive for the US dollar, and we're going to see rally in the US dollar. But this positivity, it's because of the numbers of the previous month. It's not like the interest rates, like they vote today for the interest rate from today onwards. So the interest rates, it's the event that I evaluate the most for currency performance, but the non-farm payrolls, it's an old event. Today it's the 7th of July, and we will find out what happened from the 1st of June until the 30th of June. Today it's the 7th of July. Can you guys understand a little bit of what's going on? So, and trust me, nobody will tell you this information again in this explanatory format, because most of the people out there, they just don't understand this as well. So if you don't understand something, you cannot explain it. X-Man said, good morning all. Big moves on charts yesterday, Theo. Oh God, when will I be able to capture some of it? Which moves did you see and you are excited about it, X-Man? Which currency pairs? But yeah, we had moves yesterday. Next, the euro US dollar. What to say with this one? Here is the down trend line. Kind of bullish engulfing here, also another bullish engulfing there, but really the market it's not responding to the upside. We are expecting to see the non-farm payroll outcome, to be honest. Now, I told you something yesterday. Look at the low of this candle. Focus on this candle here and look at the low. And then look at the high. You guys see that candle? It's the last Friday's candle. So Monday, it's this one. Tuesday, Wednesday, and yesterday, Thursday. And today, the current one for Friday. So the whole week, the euro US dollar pair was trading within this daily high and low, which you can see when we have trends. There is every single day new high, new low, or a couple of days. Even here we had a new high and new low. But the point that we have to understand is that when we have the non-farm payrolls, the whole week, we see that the majors, most of the times, they are just drifting sideways. Next one, Australian dollar, US dollar. Here is a nice support. That's the daily chart. Support here. We see it's not a strong double bottom, but if we go to the lower time frames, now how I would like to play this, if I will be around today on the 4-hour chart, I want to see a lower than this low here, and I will place a buy stop order above this area at this point for the bullish engulfing. But right now, I'm not going to rush to buy because there is no such a strong indication for my catalyst, for my entry, so I cannot buy it. Senjik said, good morning, everyone. You're looking good, Theo. Thank you so much. X-Man said, on many charts, on intraday charts. Okay, that's awesome. Cherry asked, how is market react usually on the NFP? If it's lower than anticipation, how usually react the US dollar? Now, guys, the markets always react on if the actual deviates from the forecast. The forecast, it's been there since Monday, since Sunday. So if you see, let's say that's the Australian dollar, US dollar, Friday, Thursday, Wednesday, Tuesday, and Monday. So on Monday, we started here. If someone expected that on Friday, we're going to have a strong US dollar, it means the Australian dollar has to push to the downside if we're going to have a strong US dollar. So many traders, most likely, they place a sell stop here based on the technical, sell stop here, because everybody sees the same picture, that if we're going to have a strong US dollar, the market is going to break to the downside. So where is the point of control that the market needs to break beyond to give a move? To the downside is the direction. Understand, but the point of control is where the market stopped recently, the swing, and it's this one here. So many sell stop orders are here, are sitting there. If the actual, it's going to be confirmed by the forecast, and we're going to see a strong US dollar, there is so much activity at this area, at the support, and the price wants to push lower, right? But what will happen if the market, if the actual will deviate it a lot from the forecast? It's like it takes everyone on surprise, and that's where the markets really make strong directional moves, when the actual deviates a lot from the forecast. Okay, if the actual confirms the forecast pretty much at the same number or same percentage, we don't see that much of movement, anticipated move. It's like we know the outcome, so something like this. Hans said DAX, please. Yes, it's 9:43. We're going to have a look at DAX. Martin said, good morning. Thank you for your webinar. You are very welcome, Martin, and thanks for joining us. Or if you joined us before, but first time you write something on the chat, thank you for that. Francis, good morning from Gambia. Always, my friend Francis. Fuad, hello, Fuad, good morning. Athena said, good morning. How are you doing, Athena? Cherry asked, what information in non-farm payroll will get stronger? What information in non-farm payrolls will get stronger? Sorry, I don't understand exactly what you mean. But guys, today Jens hosts his webinar about the non-farm payrolls, and I'm sure those who are interested in fundamentals, you can join at 2 p.m. London time, GMT. Senjik asked, what is DAX and gold going to do today, my friend? We will check the charts. Send said, after the rapid movement, will the market come back after some time to continue with its original trend? Absolutely. That's what the market always does. Next one, the Kiwi. Ranging here, I'm waiting for the price to come at this area to sell or at this area to buy, not blindly with price action set up, of course. USD JPY, I'm still on this move here. I sold based on the bearish engulfing. Yesterday, the market just fluctuated a little bit around. Today is moving towards my target. I have a 3-to-1 target. Here is 40 pips. And I'm on 114. So I should be at 120. So I think we are good there. Yep, 120. So, and for new traders here, just to let you know, guys, my trading strategy, what I trade, it's always the same on the daily chart. It's bullish or bearish engulfing candles only from support resistance. Simple as that. I go always for 3-to-1. I have a success ratio about 30 to 35%. I win my trades are winners, and the rest 70 and to 65%. The trades are losses. So I get, and I make it crystal clear to everyone, I get more losses than winners, but I go always for 3-to-1. So every time I win, even with the 30 times 3 is 90. So I'm plus 90. When I lose, and I lose 70 times, I'm minus 70. So the total plus 90 minus 70 leaves me with a plus 20. Okay. And I usually also go with 2% risk on each trade. So overall, I make about 40%. Now, sometimes I make it per year. Sometimes I make it per 6 to 7 months. Depends on the market, depends on how many trades I take. But for me to get my final end result, I have to go through the losses, and losses are unavoidable part of trading. And a retail trader, unfortunately, does not accept the losses. When I put the numbers in front of you, yeah, you focus here on the plus 20 or plus 40%. But what happened when you get the loss? This week, I had 2 losses, and I had 1 winner, 2 losses, so I was minus 4% on my account. I have 1 winner so far, and that gives me plus 6%. And if I win this trade as well, I'm going to be another plus 6%. So overall, I'm plus 8%. Okay, that's the numbers, that's the calculations. I explain it to you so many times. The problem is when you will finally accept it. Once you finally accept it, you're really not going to get bothered by any losses occurs. But the problem with trader, and I see it on because I coach, it's the acceptance of trading environment and how a retail trader can perform in the market. Everyone wants to win all the time. Nobody accepts the losses, but the losses is the way to go through winners, because if more trades, they're going to be losing trades. How can we find the winning ones? We have to go through the loss. So next, Theo, you're going to sell at 14.4426 with a strong dollar. Senjik, I purely trade price action, purely. Now, guys, some people, they see this one here and they're going to think, oh my God, Theo is crazy. He's just before his profit target and he doesn't take it. What if the price is going to come, boom, and it's going to take your stop loss? That's okay. Overall, 30 trades out of 100 trades, if they are the winners, which always it occurs, I never had a single year without taking 30 trades winners, and at least 30 trades. It's a bit more, but even the lowest of the 30, I'm okay. I mean, that's fine, because the account it's on the plus. Palmier said, good morning, Palmier. So move on. USD. Sorry. And for those who trade the candlestick, my mistake. So here is the candlestick. The reason that I use the bar chart, it's because I have much better clarity on they just filter out all the noise of the candle. You see the candle and maybe you don't see a signal, or you see a signal that it's not a filter signal. But with the bar charts, if someone sees this one here, higher high, are you going to go to sell this inside candle? Most likely no. Everyone I asked so far, particularly in this currency pair, everyone said no, we're not going to sell it. But why, when you flip on the candlesticks, you see this as a tradable opportunity? And how many people, they just sold this one? This one here on candles, it looks like a tradable opportunity to sell it. But how many people, they just focus on the candle, not where the market is going? Okay, but if you flip to the bar charts, you will see that, hey, I only see that market is making higher highs, so I will be waiting for that retracement to get into the upside. I'm not saying use candles, but I'm saying use bar chart, but I'm saying it's worth understand a little bit the difference. US dollar, Canadian dollar. Remember from the beginning of the week, I was bullish on that one, and I told you I was placing always alert and pending orders. I never got filled in any one of the pending orders. So the market is moving higher without me participating, but that's okay. There are other opportunities. Euro, JPY, sorry. Market makes higher high. It stalls a little bit here. So we do expect to see some weakness and of course to retrace a little bit of this move. We need some retracement. I do expect to see the market coming here. If we see a lower lows, so far we have a lower low. We need a retracement to confirm this lower low, and then we will be good to look to sell it until this inside support. Pound JPY, same at the top here, and market will need to come a little bit down, so it's pretty much bearish. Australian dollar, very weak, bearish. Again, I was looking to buy. I didn't get involved in anywhere because the bullish engulfing didn't occur. If I buy here with a stop loss there now, 100 pips, 150 to the resistance, I'm not interested to play this trade. Cut JPY, it was a nice trade also yesterday, bearish engulfing. Let me show you on the line charts, bar charts. So the market, it took the previous candle's high. I place a sell stop order here, sell stop, and a stop loss above the previous candle high. That's the daily chart. So stop loss was here, sell stop there, 3 to 1. Before the price reached the trend line, I was out of the trade. Now, the stop loss, it was based on this structure, it was 42 pips. But the average range of this pair is 82 pips. So it was a very small candle, a very small, let me go back to the candles, a very small candle comparing to the overall market move. And that was great. That's what I'm looking for, to see small candles with a large number on the average true rate. And it means if I get it right in the next couple of days, I will get my profits or the stop loss and just be out of the trade. New Zealand, again, I was looking to sell it from this resistance, but the bearish engulfing didn't occur, so I didn't take any trade with this Dodge candle because it's not in my trading plan. Euro Canadian dollar, finally a broke to the upside. If this break to the upside will be sustained, guys, mark this, and next week we're going to try to look some bullishness in the Euro CAD. USD CHF is trading within this range, not interested. Oh, nothing here. What did I press? Okay. Euro, New Zealand. Wow. I saw that yesterday and I was upset that I didn't buy with a bullish engulfing. You see, guys, the market was trading lower. Here it's our support. And after these strong bearish candles, a very, very small body inside. So yesterday, the market took the low, broke below, and I missed. I had the alert, but I missed to place the buy stop order here. If I had placing the buy stop order here, 100 pip stop loss, 300 pip take profit. So I will take my chance. I would have taken my chance, but I didn't. This one here, very... I don't want to get involved with this one, to be honest, because both of them are extremely strong. They show strength, overall strength in the market. Although for double bottom traders, guys, this is a nice double bottom, okay? It's been a while. It's been about a month. So 15th of June, 7th of July, okay, 3 weeks. It's a good one. I like it. So I want to see now the price action. If we're going to have a bullish engulfing, I will be looking to buy it. We also have divergences, nice divergence. The RSI, though, is below 50, and that's bearish. Okay, here is a good thing to understand. Yes, we have divergence, but also the RSI, it's below 50. 50, it's the middle. And if the RSI is below 50, it means it has bearish implications. Again, based on the indicator purely. Let's go to the gold. Gold is going to really move once the non-farm payroll actual announced. So for now, yeah, it's bearish, but we didn't see a strong candle yesterday. WTI, it's a bit mess, very range. At some point, it's going to either break to the upside or to the downside. And let's check the DAX, of course. Oh, sorry, guys. I also try some things on the account. For the I don't know if you guys know, but we launched our native platform, the Admirals platform on the website. So I'm playing around with the platform, and this here is a free fall, by the way. If it's not gonna pull back, it's a free fall to the next available zone of support. For our chart, bearish. I will mark this area here on the 4 hour. So that's the lowest point. 5 minute. Okay, where is the retracement now? Looks like if in the next 2 trading sessions, the 1 minute trading sessions, we're not going to see some retracement higher to place a sell stop order, I won't be able to sell it. I need to see some buyers coming in, some bullish candles like this one before I go sell. But if the market is going to just keep selling guys like this, then where is the entry? I don't have any entry. And that's the problem with the DAX in the morning. If it doesn't give by 9, by 10 a.m., if it doesn't give this move, so we can enter short there, to sell it there, it's very, very dangerous because the move is already occurred. Like this one here, the move is already occurred. So there is no such a thing as reward to risk or risk management. You see, it went up, takes down. I didn't even place a trade here. I don't know where to place a trade because there is no structure. If you guys sold it, I didn't get involved with that one. And you see, there are times we cannot. Sorry, I'm reading some comments. There are times, guys, we understand the direction, we understand the market, we understand everything. It's so clear, but we don't have the way to participate in the market. And if we want to try to force it, that's where all the that's when you start looking for trading psychology webinars. And I think on the trading psychology webinars that I do twice a month, I think you have to participate a little bit because there are not many people, they join me. If you have time, they are extremely valuable. I don't know if the title doesn't interest you, trading psychology or emotions, but trust me, I just purely talk on things that when I explain them here, I see also all these great comments from you guys. So I spent there 30 to 45 minutes exclusively for that webinar. And I think it's fair for you to join so you understand everything. But if you are working and you can't, you have to watch them on the recordings. William said, I follow them when I can, but can say you learn a lot of them. Theo, thank you so much, William. So guys, that's the DAX today. It didn't give us the signal to sell it like yesterday. Yesterday it was what we call bread and butter trade setup. Now it's moving a little bit. If you guys saw, there are already 10 pips on table, 10 points. All righty, so that's all from me today. I hope you enjoy the session. I hope you learn new things, new stuff. And I would like to wish you a happy weekend and safe trading. Remember, intraday traders, non-farm payrolls, usually the markets start moving sideways on the majors. If you are trading pound yen or pound euro, maybe that's a different story. But in general, the US dollar and the gold, the indices, Dow Jones, S&P, and the rest, they just move a little bit sideways. Okay, so I look forward to see you again on Monday at the same time. Thank you so much.